Transfer pricing. After studying this chapter, you will able to appreciate the need of incorporating transfer pricing provision and income tax at 1961, comprehend the meaning of significant arm's length principles and practical difficulties in application of arm's length practice, appreciate the meaning of significant sectors of associate enterprise, international transactions, specific domestic enterprises, determine the arm's length prices using different methods prescribed under the income tax law, appreciate the meaning of a safe harbor and the rules of safe harbor, incorporate income tax, appreciate the benefit of entering into advanced pricing arrangement, identify the cases where the secondary adjustment has been made, pinpoint the responsibility of the person entering into the international transaction, help in maintaining prescribed information and documents. Identify circumstances when the assessing officer can invoke the power to determine the online prices, comprehend, appreciate the country by country reporting requirement, the relevant matter in corporate income tax and compilation of BEPS and active plan, then appreciate the specific anti-avoidance measurement incorporated in the income tax act 1971. In respect of the transaction, the person located in the receiver application and appreciate the provision in corporate income tax act 1961 restriction interest deduction claiming by the entity in respect of the borrowing of the associate enterprises in lines with the BEPS action plan. Introduction. In the present age of globalization, multinational companies have branch subsidies, divisions, operation more than one country. That is possible for two or more entities belonging to the same multinational group and fix up the prices for goods and services and allocate profit among the enterprises within the group. In such a way, there have been either no profit or negligible profit in the judicial with taxation such profits. The substantial profit in the jurisdiction where the tax liability is minimum, the result of the base erosion of high tax jurisdiction for shifting the profit of a low tax from low tax jurisdiction, thereby minimizing the taxes. This may adverse effect of country share due to revenue, increasing the participation of multinational groups of economic activities in India, having given rise to the new and complex issue emerging from the transactions entering into between two or more enterprises belonging to the same multinational groups. In order to curb this tax avoidance measurement, online principles, it's used international to substitute the transfer pricing adopted by the multinational corporation to the price intra-group transfer of goods and providing services. Generally, these online prices refer to the prices or unrelated enterprises will be willingly to pay in comparable circumstances. The OECD guidelines refer to the transfer pricing as a prices in which the enterprise transfer physical goods and intangible property or provide service to associate enterprises. The two enterprises or associate enterprises are if one of the enterprises participate indirectly in a management, control or capital or others in the both enterprises are under the common control since the international transfer pricing involves more than one tax jurisdiction or any adjustment of transfer pricing in one jurisdiction required in the corresponding adjustment in other jurisdiction. In correspond to adjustment is not made and double taxation will result. Meaning of arm's length principles. The arm's length principle is a transaction between two associate enterprises. In the price that is paid if the transaction has been placed between two comparable, independent, and related parties. The arm's length principle as a content of taxation is explained in the OECD Model Tax Convention is under. Where the conditions are made and imposed between two associate enterprises in a commercial and financial relationship with a different from which they have been made independent enterprises. Any profit which would buy under those conditions has accrued to one of the enterprises, but the reason for this condition has not been accrued, may be included in the profits of the enterprises and taxed accordingly. The OECD Transfer Price Guidelines provides guidance on the application of the arm's length principles in order to arrive at the proper transfer price range from the associate enterprises. The market forces determine the business relationship between independent parties. The arm's length seeking the adjusted profit between two adjusted enterprises to compare the same as a transaction is carried out between two independent enterprises. It treats such an enterprises as a separate independent entity rather than inseparate part of the single unified business. significant of arm's length principles. There is several reasons as to why the OECD members countries and other countries have adopted the arm's length principles. Parties between MNCs and independent enterprises. The major reason is that the ACP provide the broad parties of tax treatment of MNCs and independent enterprise since the APL puts associated independent enterprise as more equal footing of tax practices. It avoids the creation of tax advantages and tax disadvantages that would otherwise distort the relative competitive position of the entities. The APL APL promotes the growth of international trade and investments for removing the tax considerations for the accommodations, determining the real taxable profits. Transfer pricing allowed by the multinationals has a direct bearing on the proportional profit it derives from each country in which it operates. If appropriate or excessive consideration is paid for transfer pricing of goods or service or intangible property between members of the multinational corporation, the income calculated on each of the members will be inconsistent with the relative economic distribution. Arm's length price is needed to be determined a real taxable profit earned in each country. The arm's length doctrine permits the tax authorities to rectify the accounts of the enterprise so that reflect correctly the income that is established that would be earned if they were an independent enterprises. Reduction of artificial price distortion. Artificial price reduction. If the APL is not followed, the multinational companies will sell goods and provide services and control the entities in a high tax jurisdiction at a high price, which exceeds the market price, and an entity in the low jurisdiction and the tax has a low price which is lower than the market price, which will result in extreme price distortion of price and goods in the international market. Accurate measurement of economic contribution. The APA provides an accurate measurement of fair market value of economic contribution unit of multinational corporation. A focus on the ALP is to ensure the proper amount of income is attributed to whether it is earned. The result of each unit emergency earned and result of commensurate with economic contribution of risk assumed. Practical difficulties in application of ALP. There are, however, certain practical difficulties applying in ALP which is described there under. True comparison difficulties in certain cases. The commercial and financial conditions governing a transaction between independent enterprises are by and large never similar to the existing between the associated enterprises. As a result, there cannot be a true comparison. The entry is scale and integrated various business activities by the associated enterprises may not be truly appreciated by our principle. Further, the associated enterprise may enter into transaction which is independent enterprises may not enter into. Say license of a variable to intangible and sharing the benefit of our research. And the owner of the intangible may be hesitant to enter into licensing agreement with independent enterprises for the fair value of intangible being degraded. In contract, he may be prepared to offer terms that is less restrictive to associated enterprises before because use of the intangible can be closely monitored. Further, there is a no risk of overall group profit from a transaction of the kind between member of the MNC. In such situation where independent enterprises are seldom undertake a transaction a type of enter into the by an associate enterprises, the ALP is difficult to apply because there is little or no direct evidence that conditions would have been established by the independent enterprises. Availability of the data and reliability of available data. There is a difficulty in getting an adequate and reliable information of the data in order to apply an arm's length principle. The information regarding the comparable companies, their profit margin, the price changing by them, the independent and comparable circumstances, they may be difficult to obtain. Further, the difference in accounting of data would result in difficult as unreliable adjustment may not be possible to begin. Absence of the comparable market price of intangible transaction. The APL reaches to the comparable arm's length basis reaches to the comparable uncontrolled market price that is a reasonable reliable for a standard transaction which the price range is narrow and the market is certain. Therefore, the arm's length prices generally falls in the archive to comparable market price for the transaction involving intangibles because they are unique. The unique nature of the transaction creates a very wide price range. Administrative burden due to the subjective condition selection of the comparable of this method, the application of the arm's length prices result in the administrative burden of tax administration as well as the taxpayers all time. Like although the associate enterprises normally establish a condition of transaction at the time of undertaking, at some point of enterprise may be required to demonstrate that is consistent with arm's length prices. The tax administration may also have engaged in the verification process and perhaps some years after the transaction has taken place. They may result in substantial costs being incurred by the taxpayers and the tax administration. It is also difficult to appreciate that the business real realities, realities, business realities which prevail in the time when the transaction entered into, they may lead to biases against the taxpayers. Despite of the practical difficulties listed in the OECD members countries, one of the view that the online price does not provide sound basis of appreciate the transfer pricing between associate enterprises. It has so far provided acceptable solution to both taxpayers and tax administrators. This experience gained so far should be effectively used to remove the practical difficulties and improve the administration. Tax scenario. Transfer pricing in relation to the international transaction. The Finance Act 2000 was introduced in the Chapter X of the Income Tax Act 1960. The view to produce statutory framework which will lead to the compute of reasonable, fair and equitable profit of tax in India. So as to curb the pricing strategies adopted by the MNCs and resulting in the base erosion of profit shifting. This provisions contain section 92 to section 90 of Income Tax Act 1961. The rule 10A to 10A to 10E, there have been inserted income tax rules 1962. That is the situation. The rules of the Income Tax Act 1961, Salary Income Tax Act 1962 respective will affect all the corporates and non-corporate and corporate associates was dealing with the non-resident for import and export of goods and property service. The following condition to be satisfied in order to attract the special provision of Chapter X relating to the avoidance of tax. There must be an international transaction first. Such international transactions should be between two or more associate enterprises, either or both of them are non-resident. Such an international transaction should be in nature of purchase, say, lease of tangible or intangible assets, provision of services, lending and borrowing of money, and any other transaction has been bearing of profit, income, losses, assets of such enterprises. Further, such a transaction has also involved allocation or appropriation of any contribution to any cost or expenses incurred or to be incurred in connection with the benefit, service or facility provided or to be provided by one or more of the associate enterprises on the basis of mutual agreement or arrangement between associate enterprises. Such international transaction must be done at a long length prices, and such international transaction must also be done the length of the arm length prices. It's required to determine such an income and appropriate the cost of expenses on the basis of arm's length prices. The above adjustment should either result in increase in income or decrease in loss or reduce the return of the associate. In other words, adjustment should not have effect in reducing the income or chargeable to tax or increasing the loss. The computation of the income from transaction of non-resident section 92. Section 92 provides that any income arising from the international channel shall be computed having regard to net prices for the purpose of allocating any of the expenses. Income should be determined on the basis of net prices. Transaction with associate enterprises should be at arm's length prices. The section further provides that the international transaction between two or more associate enterprises where there is a mutual agreement or agreement for allocation of or appropriation of any contribution or any cost or any expenses in connection with the benefit, service or facility provided by any one of the enterprises, that allocation of cost expenses shall be determined having regarding arm's length prices of such benefits and service or facility. Objective of transfer pricing provided to protect the tax basis of India and ensure that due to intercompany transaction there is no reduction in tax profits or the taxes paid by the Indian company. It is however pertinent to the note that transfer pricing provision would not be applicable if the substitution of arm's length prices has been the effect of reducing the income chargeable to tax or increasing the losses. Assessing officer will have the wide power to determine whether the arm's length prices of such transactions are made adjustment to the computed income. And the key for section 92 are associated enterprises, international transactions, to arm's length prices. These terms are defined in section 92 or 92B or 92C. Associate enterprise section 92. Section 92A is defined the associate enterprises. Generally, section 92A provides 13 relationship provides certain relationship between enterprises which constitute deemed associate and enterprise. The term associate enterprise is a relation to the another enterprise defined in section 92A. The associate enterprises are those who are owned or controlled by the same or common entity person. Associate enterprise section 92A. Condition: the enterprise will enterprise which participates directly or indirectly through one or more of the enterprises. Management of the enterprises, other enterprises, control of other enterprises, or capital of other enterprises. Mr. A Limited directly participates in the management of B Limited, and B Limited directly participates in the management of C Limited. In some situation, A has a direct participation in the B Limited, but there is an indirect participation in C Limited. In this scenario, both B and C Limited are associated with the enterprise with the A Limited. If one or more party participate directly or indirectly or through one or more enterprises in management, control, capital of the two or more enterprises, those two enterprises are associated enterprises. A directly controls A controls A Limited and B Limited in such limited. In such scenario, both A and B Limited are associated enterprise. Since there is a common person and Mr. A who controls both the entities A and B Limited. There is sensitive enterprises are determined to be an associate enterprise if they are fall under one or more of the situation. Content section 92A. The section provides 13 such situation during the associate enterprises in relation to the deemed to be enterprise. The two enterprises are deemed to be associate enterprise if deemed associate enterprises section 92A. Condition situation example enterprise ownership. One enterprise holds 26% or more of the voting power directly or indirectly in other enterprises. Mr. A holds 33.3% in holding percent B Limited and the B Limited hold 80% of the income. The situation the A Limited hold 26% of the both voting power of B Limited and directly and C Limited is indirectly through B Limited. Therefore, both the A Limited and C Limited deemed to be associate enterprises. -26%. Substantial voting power rests to entries by a common person. Any person of the enterprise holds 26% or more of voting power directly or indirectly in each of the two different enterprises. Mr. A holds 40% of voting rights in both X Limited and Y Limited, where either X Limited has any holding in Y Limited or nor Y Limited has a holding in X Limited. That is, A Limited holds 40% and 40% in X Limited and Y Limited. In the situation, A Limited holds 40% of the voting powers in X Limited and Y Limited. X and Y are deemed to be associate enterprises, advancing of a substantial sum of money. One of the enterprises advances loans to other enterprises for amount of 51% or more book value of the total assets of other enterprises. Then the book value of the total assets is 100 crores and advances loan is 60 crores. And in this case, X Limited advances loan 60 crores. That is 60% of the book value of the total assets of Y Limited, X Limited, and Y 15%, 15%, 56%, 11%. Guarantee borrowing. One of the enterprises guarantee 10% or more of the total borrowing in other enterprises. P Limited has a total loan of $1 million. That is XYZ Bank of America. Out of that, A Limited, an Indian company, guarantee 20% of the total borrowing in the case of default mode by P Limited. In this case, A Limited guaranteed 20% of total borrowing. PINC, INC, and A Limited is deemed to be associated enterprises. Appointment of majority directors of other enterprises. One enterprise appoints more than half of the board of directors of the or members of the governing board, or one or more executive directors or executive members of the members of the governing board of other members. One of the enterprise appoints more than half of the board of directors of the members board of directors or more members of the governing board, or one or more executive directors or executive members of the governing board of other member trusts. The excellent as of 15 director on board out of the appoint 8 director in the case section while deemed enterprises. Appointment of majority of directors two directors of two different enterprises by the same person. More than half of the directors are members of the governing board, or one or more executive directors of the members of the governing board of each of the two enterprises appointed by the same person. Mr. A appointed 9 director, 15 director, and appointed 2 executive director, one on the board of the Y Limited. And the same case, a common person, Mr. E appoints say more than half of the directors in the X Limited and appoints 2 executive directors in X Limited. Both X Limited and Y Limited are deemed to be associated enterprises. And dependency of intangibles with respect to other enterprises as exclusive rights. The manufacture or processing of goods in the manufacturing or processing of goods or articles or business carried out by one enterprise is wholly dependent on the know-how of patent, copyright or trademark license and franchisee of other enterprises. Trade and practices of organizations of other enterprises and governing rights and the business similar nature. Other data documentation drawing specified into the patterns and invention, models, design, secret formula for process by which other entity is a owner in respect of which the enterprise is exclusive rights. Depending upon the raw material supplied by the enterprise, 90% and more of the raw material and consumable required for the manufacture are the process of goods and articles carried out by one enterprise supplied by other enterprise. And by this person specified in other enterprises where the prices has been conditioned right into the supply influence by the enterprises. Dependency of sale. The goods or article manufactured or processed by one enterprises are sold by the other enterprises or to the person specified in other enterprises or spare parties or conditions related to those influenced by the goods and article manufactured or processed by one enterprises or sold to other enterprises or to person specified to other enterprises and its prices and the conditions relating therein are influenced by other parties or dependence of sale, dependence of raw material, dependence of intangibles. Good. Then control by common individual, where one enterprise is controlled by the individual, and then other enterprise is also controlled by the same individual. Other relatives are jointly by the individual and relatives. There are A and B are relatives. A controls X limited and B controls Y limited. Therefore, X and Y are deemed associate enterprises. Controlled by HUF members and therefore where one enterprise is controlled by the HUF and other enterprise is controlled by the member of such HUF or by the relative of the member of the HUF or jointly by the members then the relatives. HUF member of HUF or relative members of HUF control of B limited and AM control. So A limited, B limited associate deemed associate enterprises. Interest in the firms and AOP or BOI, where one enterprise is a firm, AOP and BOI, another enterprise holds 10% or more interest in the firms of AOP and BOI. Mutual interest relation, there is an existing between two enterprises. One any relationship mutual interest of any may be prescribed. The term enterprise section 92 of class 3B suppose and including certain specified permanent establishment who is has been and proposed to be engaged in the activities meaning of enterprises relating to the production, storage, supply, distribution, acquisition, and control of articles or goods or know-how, patent, copyright, trademarks, license, franchise, or any other business. The commercial rights are similar nature of the data documentation, drawing of a specified relation to the any patent, invention, model, design, secret formula, the process of which either enterprises as a owner or respect of which has been enterprise has been exclusive rights. The provision of the service of any kind carried out of any which in the purpose of contract of investment provides a loan or in the business of acquiring, holding, underwriting of dealing with shares, debentures, or securities other of the body corporates. By such activity, business is carried out directly and indirectly in one of the unit, divisions or subsidiaries, which may be unit or divisions or subsidiaries located in the same place or where the enterprise is located in a different place of business. The permanent establishment. The permanent establishment includes fixed place of business where a place of business and enterprise is wholly or partially carried out. Permanent establishment defined by the definition of the international transaction section 92B. As per section 92B, the international transaction means a transaction between two or more associated enterprises, either a whole, both or whole, or as a whole or non-resident. International transaction. Transaction, the nature of sale or purchase or international transaction. International transaction in the nature of sale or purchase or lease of intangible property. International transaction, sale or purchase or lease of intangible property, tangible property. International transaction, the nature of provision of services. International transaction that leading to lending and borrowing money. Any international transaction of any other transaction having bearing of profit, bearing of income, bearing of losses, bearing of assets and expenses. Any international transaction, mutual agreement or arrangement between two or more associated enterprises, allocation, appropriation, or any contribution, any cost of incurred or to be incurred in connection to the benefit or service or facility provided to be provided on any of the mode of enterprises. When the respect of a transaction enter into by an enterprise with a person other than associate enterprises, herein refer to other person deemed international transaction. There exists a prior agreement in relation to the relevant international transaction between other person and associate enterprises. By the reason terms that relevant transaction determined to be subsequent between such persons and associate enterprise persons. The same either the enterprises or the associate enterprises or both of them are non-resident. Such a transaction either entered into between enterprises or other persons shall be deemed to be international transaction entered in between two associate enterprises, whether or not such persons are non-resident. Example, so A is an Indian company has entered into an agreement to say the product tends to be limited. An unrated party in first June 2003. B has entered into the agreement to sale of his product X to C LLC, a non-resident entity. This holds 72% of the voting power of 72% of the voting power of A Limited. On 35, then the transaction between A and B Limited shall be deemed to be a international transaction or associate enterprises, irrespective whether Mr. A, B, or non-resident. So A limit provide to B limited, B to C limited, and C associate enterprise. The agreement of sale product entered on 1st June, the agreement of sale of product is entered by 31st before transaction between A and B deemed to be international transaction between associate enterprises whether or B whether or not B is a resident enterprise. C Limited is deemed to be an associate enterprise of A Limited since it holds 26% of the voting power. The scope of international transaction shall include transaction amplified in the scope of the terms used. The international transaction in purchase, international sale, international transaction in transfer, international transaction in Lease, international transaction, use of tangible property. Amplification and scope of term. Tangible property includes building, transportation vehicle, machineries, equipments, tools, plants, furnitures, commodity, any other articles, products and things. The purchase, sale, transfer, lease, use of intangible attributes, including transfer of ownership or transfer use of certain rights. Use of certain transaction in transaction like your right, use of land use of copyrights, patent, trademark, license, franchising, customer list, market channels, brand, commercial exterior designs and practical and new design business or commercial rights or simplified manager capital financing any other type of non long terms and short term borrowings leading and characters purchase or sale of marketable security, any family transaction, any type of advance, any type of payments, any type of deferred payments, any type of receivables, the other debit arising during the course of the business. Provision of services, international transaction. No, provision of market research, provision of market development, provision of market management, provision of administration, provision of technical services, provision of repairs, provision of redesign, provision of consulting, provision of agency, provision of scientific research, provision of legal and accounting services. The business restriction in the reorganization entered into by the enterprises by an associate enterprises. Only all the transactions are included in the defined international transactions where or not bearing profit or income or loss of assets or further enterprise at time of transaction or any other further date. The expressing international intangible property shall include type of intangible asset innovation, an example of some type of intangible assets. Type of intangible asset. Marketing can also be an intangible thing. Trademarks, trade names, brand names, logos, technology, process of patents, patent application, technical documents, a laboratory notebook, technical know-how, artistics, literal works and copyright, musician composition, copyright, maps and engraving, data processing, the proprietary computer software copyrights, automated database, integrated circuits, mask and maskings, engineering, industrial designs, product patents, trade secrets, engineering draws and semantics, blueprints and proprietary documents and consumer list, consumers contracts, consumer relationships and open purchase list. Favorable suppliers, contracts to and licensing agreements, franchise agreements, non-compete agreements, human capital, trained and organized workforce, employment agreements, union contracts, location, leasehold, interest, mineral exploiting rights, easement, air right, water right, civils, goodwill, institution goodwill, provisional, practical goodwill, personal goodwill, professional, celebrity goodwill, general business goodwill, method processing, method program systems procedure, campaign, survey, studies, forecast, estimation, data. Any other similar item that is derived from the value of intellectual content rather than a physical attribute. Transaction. The word transaction also defines section 92F, which include an agreement, understanding, and action of consent. Whether or not the agreement, whether or not understanding or action to be formal or in writing, whether or not an agreement, whether or not an arrangement, understanding and action to be intend to be enforced by the legal proceeding. Section 92F provides that inclusive defined in the terms transaction based on the reading of the section. This evidence that is not necessary to be a transaction undertaken. Between the two enterprises were needed to be a formal written agreement between them. It is only relevant whether the transaction has been entered into substance, and sections also negotiate the requisite of legal enforceability of agreement or understanding. To may be noted that one of the parties in the international transaction subject should be a non-resident. Therefore, the transaction between a resident agreement A and a foreign branches or between two or more foreign branches will not be considered as an international transaction. Hence, it is for the reason that A Limited is a resident in India and all the foreign branches has been deemed to be resident in India, and the transaction between the head office and the branch should be a branch or inter will be considered as a transaction between residents. Even otherwise, there will be no avoidance of incomes and transactions between the Indian head office and foreign branches. In other hand, an Indian branch of the foreign company having a transaction with the head office, the same will be covered by the definition of international transaction between associated enterprises. This is because the Indian branch, a permanent establishment of the Limited, is liable to tax in India in respect of the Indian operations, and therefore any transaction between the Indian branch of B Limited with the head office of the foreign country or with the branches of B Limited outside India with the consideration as a international transaction, and it will be established as a transaction as an arm's length basis. This will be the position even in the specifying subject to transaction between the patent and company and this foreign subsidiary, and therefore such a transaction will have in compliance with the provision of transfer pricing regulation. Arm length price, section 92C. Arm length price is defined in section 92 here, which defined in the price is applied or we propose to be applied the transaction between the person or other associated enterprises or uncontrolled condition. Section 92C deals with the method of determination of arm length prices and the factors which is concerned with the applicability of non-applicability of the particular method of a given situation. The factors of the methods incorporate in the sections are not exclusive. The CBDT may prescribe further factors and method. It provides an arm length prices in relation to the international transaction would be determined by any of the following method, being the most appropriate method having regard to the nature of the transaction or a class of transaction or class of associated person or a function performed by any of the person or any of the relevant factors of the CB18 may prescribe namely. Comparable uncontrolled price method, resale price method, cost plus method, profit split method, transaction net margin method, any other method as may be prescribed by the board. Comparable uncontrolled price method, resaleable method, cost plus price method, profit split method, transaction net margin method, and any other method prescribed by the method. According to the CBIT has prescribed that any other method for determination of arm's length prices in relation to the international transaction would be any method which is takes into the account that prices is being charged or paid or would be charged or paid for the same or a similar uncontrolled transaction which is related between the non-associated enterprises under the similar circumstances controlled under the relevant fact. Section 10AB transfer pricing, traditional transaction method, transaction profit method, other method, traditional transaction method, comparable uncontrolled price method, resale method, cost plus method, traditional method, transactional profit method, profit split method, transactional net margin method, other method provided by section rule 10AB. Section 92C as per provision provides that a most appropriate method out of the above method has to be applied. Most appropriate method to be applied in determining arm's length price in the prescribed manner. Section 10B/1 provides that the manner of determining arm's length price under the 5 methods are stated. The above diagram describes respect of any goods, any properties, any service provided purchase, or any service sold under any of the international transactions. Comparable uncontrolled price method. Under the method, the price is charged or price paid for the property transfer or a service provided under any comparable uncontrolled transactions or transactions should be identified. Identify adjustment of the account of difference between the international transaction, comparable and comparable uncontrolled transaction or between the enterprise entering into such a transaction should be materially affect the price in open market can be made. Adjusted price as worked out of B should be respect to the arm's length price, respect to the property transfer or service provided in international transaction. Illustration: US Limited, US company has a subsidiary IND in India. US Limited sells computer monitors to Indian Limited for resale in India. US Limited also sell computer monitor to CMI Limited, another company reseller. It sells 50,000 computer monitor IND for 11,000 per unit. The price fixed by the CME at the 10,000 per unit. The warranty in the case of sale of monitor by IND is held by IND Limited. However, sale of monitor by CME US is responsible for warranty of 3 months. Both US Limited and IND Limited offer extended warranty for a standard price of 1,000 per annum. On that fact, how that assessment of IND is going to be affected. Super. US Limited, the foreign company, and Indian Limited, the Indian company, are associated enterprises in the US Limited. It's a holding company of IND Limited. Sells computer monitor to India for resale in India. The US Limited also sells identified computer monitor CMI, which is not an associate enterprises. The price charged to US Limited is similar price transferred to the comparable uncontrolled transaction, therefore identified. The comparable uncontrolled price come to comparable uncontrolled price method is determined the arm's length to be applied. While applying the CMP comparable uncontrolled price, the price comparable uncontrolled price needed to be adjusted the account of price difference in between international transaction between US Limited and Indian Limited. Uncontrolled transaction between US Limited and IU and Limited. The prices of adjusted shall be the price so adjusted shall be the arm's length price for international transaction. For a sale of monitor to CME, the US Limited is responsible for the 3 months warranty. The price charged to the US Limited CME include the warranty. CME includes charge of a warranty of 3 months. Hence, arm's length prices compute monitor being sold by US would be the price charged by UCM 10,000. The plus cost of warranty include in the charge of CME is 253,000. 10,000 by 3 divided by 250. So the arm's length price is 10,000 minus 250. That is actual base is 11,000. So difference per unit is 1,250. Number of units supplied by unit 50,000. 50,000 1 to 5 is 6,25,000 is the price to be charged. Sale price 10,000, bank 11,000. Cost of warranty among 3 months, but 1 year. So 3 months again, another 3 months into cost on 250. So you have to minus 250 and arm length price without this minus 250 included 250 included. So 10,000 is 250. 9750 9750. The actual price paid 11,000 minus 9,000. 1250 should be added. So no reduction in chapter 6 should be allowed with respect of the enhanced income of 6.25 crores. It is assumed that Indian IND has not entered into advanced pricing arrangement or ought to be subject to safe harbor rules. Resale price method. Under this method, the price of this property purchase and service obtained by enterprise associated enterprises as resold and provides unrated party should be identified. The following adjustment should be made such a resale for a normal gross profit margin or expenses incurred in connection with the purchase of the property to obtain a service. Function of other differences, including difference in accounting practice, should be materially affect the gross profit and margin of open profit. An adjustment of B should be considered an arm's length price subject to the purchase of the property and obtaining of services and enterprises for the associated enterprises. So 10,000 I said 250 minus 950, 11,000 minus 950. Illustration. ER3 Limited, Calcutta is engaged in the trading of electronic goods, purchasing goods from the associated enterprises. Singapore also in 2024. Calcutta engaged in the trading of electronic goods, purchase goods from the associated enterprises. Sun Prime Singapore also from other parties. Financial year gross margin for 15% sale of goods of Sun Limited. 20% on the case of Ocean. After sale warranty of 6 months provided by the Sun Limited, whereas Ocean Limited gives after sale warranty of 1 year. The cost of warranty may be taken 2 percentage of cost of warranty may takes 2 percentage of the sale price. The Sun Prime Limited is a brand values international issue known and the brand the benefit of the brand value is taken as 1 percentage of sale price. During as limited sold goods to Sun Limited it sold goods for 20 crores and Ocean Limited sold 15 crores. Regarding the transportation cost and the purchase goods, there is no difference between rated and unrated parties. Compute the online price of the transaction between the Earth Limited and Sun Limited Singapore by applying the resale price considered. As per the section 92P, the transaction entered into between IP Earth Limited, Indian company, and Sun Limited, Singapore companies, associated enterprises for purchase of electronic goods would be international transaction. Since the Earth Limited has purchased similar electronic goods from Ocean Limited, an unrated quantity in the same sold to the same unrated party, the transaction can be considered as a uncontrolled transaction. And the gross margin is 20% given on the sale of goods to be considered. From the purchase of determine the arm's length price of the transaction and Sun Limited since the function adjustment need to be given. The resale of goods from Sun Limited 20 crores. Plus the profit margin refer to uncontrolled transaction at around 20%. 20% of 20 crores is 4 crores. Minus 4 crores 16 crores. So had the adjustment benefit of brand value that is 1%. 1% of the Sun Limited 20 lakhs. Less the adjustment cost of warranty at 6 months. So 6 months 2 percentage of the sale value it's 4 crores other than 50% 16 crores minus add minus 6 crores to 16 crores then minus 16 crores. Cost plus margin under this method the direct and indirect cost of production incurred by the enterprise is in the respect of the property transferred or the service provided by the associate enterprise should be determined. This amount of normal gross profit markup to such a cost arising from the transfer or provision of same similar property or service of the enterprise by the unrated enterprises comparable to uncontrolled transaction or transaction should be determined. This above normal gross profit markup should be adjusted to taken into account a functioning of other differences which would materially affect the profit markup of the open market. The cost referred to the above should be increased by the adjusted profit and once state C and the price arrived will be considered as an normal price. Illustration. In this in Canada holds 35% shares of MCNC, 26% more. So LMD is developed a software and does both on-site and off-site consulting services for customers. LMN Limited during the limited as an bill ABC Canada Limited for 120 hours rate of 1800 per man hour. Total cost the direct indirect exceeding and the work would be executing the work amount to up to 1 lakh 2 lakh 20,000 where MNC limited bills XYZ the India at the rate of 2,800 per month for the similar service and manner earning gross profit 50% on the cost. The transaction of the MLA Limited with the ABC Limited transaction the element of the ABC Limited and the element comparable subject to the following condition. While Element Limited derives technical support from ABC Limited, where no such support from EXP Limited. The value of technology supports received from the ABC Limited would be put to 18% normal profit. The ABC Limited gives the business to a large volume. Element offers to ABC Limited quantities could be value 10% of cost value. In the case of rendering service of ABC Limited, LM neither earns any risk or incur any market cost on other land, the services and M has to. Assume all the risk of the constituted by the market function would be estimated 12% margin. LMN is offered 1 month's credit and the cost of providing credit to be valued 2% of the gross market. No such credit is given to XYZ. The normal price of the income to be increased under the cost plus method. So Solution LMN Limited is an Indian company and B Limited and Mani Indian company and B Limited is a Canadian company and deemed to be associated enterprises and ABC Limited holds 35% of the voting purpose and is not less than 36%. Further, the transaction is developed software and providing consulting service and falls in the meaning of international transaction. Action 9 OP, hence the transfer pricing is known. So the gross profit margin incurred by Excel Limited 150%. Adjustment profit differences less value of technical support ABC Limited technical support of XYZ does not provide any support, therefore the value of suggested 15% gross profit 9% and profit quantity discount is 50% of 10%, 5% risk of the cost associated with the market of L1 LM Limited has a bear all the risk and cost associated with the marketing function. In the case of XY Limited, which is no risk, is cost of services ABC Limited. Therefore, the market risk cost is 25%, 50%, 40%, 80%. So 956 is 20%, 21, 30%. Cost to protect 1 month and two but limited but not 200 further for adjustment of the cost of incurred is 2%, 2%, 1%, 31%. Arm length of the gross profit mark 31%. The cost incurred by MNN for executing evenly 31. So 31% is 69% value 2,94,000 to Arm bill. So less actual bill of 1,820 hours is 216,000 minus total income of LM Limited to be increased by 78,780.